Okay, so I'm going to show you an actual live trade. Yesterday, somewhere around this area right here, that's when, or somewhere actually somewhere around this area, I sent out an alert saying that we would sell a call spread at 207.5 and 209. So 207.5 is roughly, in this region up here. If you look at the equivalent chart on SPY. And the bet was that by next Friday that the S&P would close below this point. Now the thing is, this has dropped so much that the value of that call spread has already increased dramatically. So let me just show you real quick on my phone right here. So I'm going to log in here, um, and basically the one that I showed you was the 207.5 call December 24th. So I'm going to click into that one. That's this guy, and if I click leg details, so as you can see here, there's 2.26 in profits from the short call, and then the long call was down 1.24. So that spread difference is basically just over $1,000. Now the maximum profit on this trade was something like 1,100 or 1,200, and this is expiring next Friday. So there's an entire week. So I could wait 5 days, and as long as it expires below 207.5, then I'll make the full $1,200. But since I realized, or I basically almost realized, 1,000 of the 1,200 or 1,150, I think it was, profits, I might as well just take it. Otherwise, if it happens to rally, then I'm gonna lose all of that profit. So I'm gonna place a live trade right now to show you exactly how to do this. So notice that I have 32 contracts. So I'm just gonna go back here, and I'm gonna, before I bought, so now I'm gonna sell. I'm gonna sell those 32. So I'm gonna be on this screen, and so basically what I'm gonna do is I'm gonna hit the sell button, and that's going to open this screen, and then all right, so we have the sell screen, and so what I'm going to do is I'm going to change this to 32 contracts, and then I'm going to sell it at 9 cents. So I'm going to click submit, transmit order, say yes, and see that it's basically pending, it's sitting there. And so I guess we'll give it some time and see what happens. Eventually, right now the bid is, there's only 1 times 32. That 32 is me up at the top. And I'm just waiting for, it to actually execute. And the reason why it's taking a while is because it's doing 2 sets of contracts. It's doing the 207.5 and the 209s. And each of those contracts has a separate bid and ask. And maybe the market just moved in such a way that the bid and ask spread kind of increased, and so the liquidity is a little bit harder. Now if I wanted to execute this quickly, I could just raise the amount that I sell to 10 cents instead of 9 cents, but since I'm not that urgent, I'll just sit around, and once the market kind of fluctuates a little bit more, the order should go through. Oh, it looks like it filled 3 of it so far. It's sent in 32, so there's still 29 left. Just for demonstration purposes, I'll change it to 10 cents. I'll click that, go to modify, and basically increase it to 10, since the market's also going up. There we go. So we have the complete 32 executed. And so you could see that I sold the 32. So since I made this recording, the market actually rallied a little bit from 209-ish to 214, 215. And so that's basically a live trade. So these numbers are constantly changing. But to recap, I sent out the alert yesterday to buy to do the short call spread somewhere around the 2045. Once it hit the 2045 area to 2050, that's when I sent out the call spread short at 207.5, betting that it won't go above 207.5 by next Friday. Well, it turns out it went really far down the following day, and the value of our call spread basically reached like 90% of what we could actually potentially realize as a maximum profit. So I went ahead and just realized that profit, realized that 1,000 of the 1150 ish, so that there's no risk in the next couple of days, and I can always re-enter if I want to. And so that's how we realized $1,000 from our call spread, the short 207.5 on the SPY and long 209.